Good morning, guys. Just wanted to make a quick video, well, maybe not so quick, about how I read charts. This is live, this is like intraday, and talk about time frames, which ones are kind of the best to use or the safest. And it's like half hour after market open. I've already finished trading for the day. I actually had a small red day, very small, like less than 0.5% of my account. Most of my trades were winning, but I took a trade in the pre-market that went against me and I couldn't quite dig out of that. But anyway, first I just want to say, like, you know, if you're new to day trading and you're wondering which time frame you should use, I would suggest, if you can, if you have the patience and the discipline, and if you don't, maybe that's even more of an argument as why you should use it, is the 5-minute chart. You know, I've been studying this for like over 6 months now, and really spent at least 100 hours, maybe probably 200 hours by now, of intense study and trading every day, and really kind of analyzing what's happening, and looking back, you know, when things went wrong, when things went right, and why. And what I found is that the 5-minute chart is by far the most reliable if you're trading, you know, lower float stocks and stocks that are high in volatility and that show up on, you know, your pre-market gappers list and things like that. So these are all those type of stocks, or stocks that popped up on a top gainer. And just look at this one right now that's popping up. If I traded this one, the trade I would, and of course, yeah, it's easy for me to say now because this could go the other way, of course. But you know, how would you get into something like this? If you have the 5-minute chart up and you notice that, okay, at the open, first of all, I honestly probably wouldn't be looking, you know, at this right away. I probably would have missed it because it's trending down here. But let's say you were watching it and you were thinking, you know, this thing is going to reverse, because notice right after the market open, it just kind of chops around. It never really sells off or sells any lower. So if you were watching it, you're looking for a reversal. When is this thing going to pop back up? And the 1-minute chart is kind of unpredictable. You see over here, it kind of gives all these like false breaks to the upside, and these are really pullbacks on the way down. But they, you know, if you're just watching and you're seeing, oh, these green candles popping up, you can get tricked into thinking, oh, this thing's on its way back up. Even here, you get quite a few green candles, but then it just chops around and comes back down again. So this is where like the 5-minute chart really comes into handy, because it kind of shows you a longer term view of what's going on with the chart. Just trying to get things to look right. So, okay, so you're watching these candles and you're noticing, okay, I'm getting higher lows. That's the first sign of reversal. But you're still seeing choppiness. What you could do is notice that, okay, there's kind of like a line of resistance around 238, maybe as high as 239, and you could put a buy stop limit order. It actually was right there at 240. So you're trying to catch the break through 239, and then the spread is 1 cent. So 242, that's the range that it's going to fill you at, in between 240 and 242. And then what would have happened is, let's say you had that order, you put it in during this candle, so you got an order waiting at 240. Then when this candle shoots up, you're going to get filled at 240, and then you can ride it up, you know, watch the price action up, and, you know, maybe sell at 248, or, you know, if you got lucky around the 250, and you caught a 10-cent move, which is pretty good within one candle to catch 10 cents. So, you know, if you had like 100 shares or something like that, that's $10, right? So anyway, that's one example. Let's look at another stock. Here's BLNK. This one I was watching in the pre-market because it really kind of popped up out of nowhere. And it's kind of doing a similar thing. We're on the 5-minute chart again. You notice this big, huge sell-off. And you see kind of like a higher low here on this candle. And it really popped up. I guess, you know, you could have done the buy stop limit thing here and catch that move which is pretty nice. It's like almost a 20-cent move, so even better than the last one we were looking at. But you got to be careful because in the next candle it did kind of flush down. But generally what I would do, it depends on kind of your risk level, how long you're willing to hold on to things. If I did buy in just above the high of this candle at 895, I would put my stop probably at 872 or so, or 873, and just below this candle. And then, if you were just writing it out, you still haven't hit your stop. And, already you're up, let's say 935, and we said we would buy in at 895. So what is that, 40 cents up already? So that's pretty cool. And if you were still in at this point, the smart thing to do would be to raise that stop up now over here, because if you raise it up to the bottom of this candle, even if it comes down and hits you, you've already made a decent profit, 23 cents per share profit, which is really nice. And if it continues higher, you can just keep doing that, raising the bottom of your stop loss. So that's really, kind of a pretty smart, safe way to trade. These, I didn't pick these out ahead of time. I had the stocks on my watch list, but I didn't look at those moves ahead of time. And that's how I play the 5-minute reversals. And you can see, 2 out of 2 so far have worked. And then we can look at GameStop. GameStop, that one was super choppy at the open. So here's one that is a fail. And again, even good patterns fail. Now, I would also argue that if you bought in over here, you're buying, under all the indicators. This is a 9 EMA and a 20 EMA and the VWAP, which indicates some weakness. Let's go back really quick. Now, these other ones, they were kind of trading right around all the indicators. This one was still above the 20, but below the 9 and the VWAP. So that was a little bit of an aggressive move, but then as it continues higher, this is showing a lot of strength. And just real quickly to check the indicators. On the previous one, this one was kind of trading below the 20 EMA, but around the 9 and the VWAP. So, not as strong as you'd like, but signs of strength. So nothing is really like black and white in trading. And sometimes these ideal setups are the ones that are about to sell off the quickest. So this thing looks pretty nasty at this point. I really wouldn't watch it because it's, everything is below the indicators. It's looking weak. So I wouldn't even make a play on this one. And then NAOV, this one, here's one that was trading up above all the indicators. And there's not a lot of plays here. Now this is when you have these really long wicks here, that shows like a lot of price uncertainty within each candle. Because for example, this one here opened at $1.23 and closed at like $1.25, but during this 5-minute candle went all the way up to $1.34 and all the way down to $1.20 at one point. So if you see something like this, you really want to be careful getting into it. If you do, definitely use small share size because it's whipping around a lot even within each candle. And then RMTI, that was one that wasn't on my pre-market watch list, but kind of popped up on the top gainers list during the day. And this one, it looks kind of interesting, but this is where looks can be deceiving. It's fairly strong, but you think, wow, this is a really big candle. So let's say you had an order to buy the breakout of this one, which the high is 167, and then it goes all the way up to 172. It's a 5-cent move within 5 minutes. So on a 1-minute candle, a 5-cent move is decent. You would really like to see around 10 cents. But to get 5 cents and sitting on a trade for 5 minutes, it's not really worth your trouble, in my opinion. So, and you can see it doesn't really do a whole lot after that. So this is like a slow mover. I just kind of pulled this one on the watch list during the day, and I didn't do a whole lot of research into it. I bet you it's a high float stock. Let's see, RMTI, yeah, 66.59 million. So I guess that's kind of like medium float. The low float's like around 20 million, and the volume is like it's okay. It's above the 1 million mark, but not nothing crazy. So that's a sign, you know, of the price not being able to move that much, and we saw it didn't move a whole lot. So anyway, that's kind of my intraday analysis, and just trying to give you guys a look on how I read charts. So reading the price action, learning to read price action, it's quite an undertaking, but it's really worth it because you can get a good feeling about, you know, where things are going and why they're going that way, and where they might go in the future. So anyway, any questions or comments, let me know below. Thanks.